All right. So about this market, first let's get us introduced what is forex. All right. So starting with forex
Okay.
market. So forex is just like a market where there is exchange of currencies. Like one currency is traded against other currency. The forex market or foreign exchange market is the largest and most liquid financial market in the world, with over 6 to 7 trillion dollars traded every day. It operates as a global decentralized and over-the-counter or OTC marketplace where international currencies are bought and sold or exchanged. Okay. Now coming to pairs. What are pairs? Pairs is this thing. Euro versus USD. Now, what is the use of this? Actually, the currency that is on our left side is known as base, and the one that is on right side is known as quote. That means for 1 euro, how many dollars will you get? That is the same thing in this. Just it is denoted by a slash. All right. Now, this market is open 24/5. That means it will be open for 24 hours for 5 days in a week, Monday to Friday. Now, now that we know that what is the forex market, we'll know a bit more detailed about what is the like pairs and what are their types. So right now, if you see here, let me just select the forex market. All right. Okay, so this is Euro USD. This is known as a major pair because this is a major currency. When one major currency is traded against another major currency, it's known as a major currency or major currency pair. Alright? For example, USD JPY, Euro JPY, GBP JPY, or even like what is it called? Wait. Yeah, GBP USD, NZD USD, odd USD, all are just major pairs. But there are some minor pairs as well, like USD CHF, USD CAD, and so on. Okay, and there are one more type of currency pairs named known as exotic pairs. Now, if I tell you what are exotic pairs, okay, so there are like pairs which are not too much important or has value in this whole world. All right. For example, you can see Nigerian dollar versus US dollar or something like that, and so on. Okay, sometimes Mexican peso versus Nigerian dollar, and so on. Like USD INR, all of them are like exotic. They are not traded too much and are generally just consolidating. All right. Now there goes the information about pairs. Now coming to charts. What are charts? Charts are this whole graphical interface that you can see right now. It is usually available to some platforms known as such as TradingView, CTrader, MetaTrader, and some other platforms. These platforms give you access to the financial charts where you can analyze them to understand from where to where the market is going to move. Now, these charts are generally of multiple types. For example, there are candles, there are bars, there are hollow candles, volume candles, lines, line with markers, tape, and so on. But the most used is this candles chart, or known as Japanese candles chart. Okay, this chart is very important because it is used worldwide by several retail traders to understand the financial markets and its direction. Now coming to how to read the charts. To read the charts, first we have to understand what is a candle. Well, a candle is this particular object that we can see on the screen. Now this thing is known as a candle because you can see just like a real life candle, it has a body and it has a wick. Now coming to the anatomy of a candle. Candle anatomy. All right. So candle anatomy is very important because through that you can understand uh, how to read the markets or how to read the chart. Now coming to how to read the like anatomy of a candle, it is something like this. As you can see in this example, like below, there are candles like this. Suppose this is a bullish candle. Bullish candle means where biased, where most active. Okay. Generally, this candle will be green on the default chart. If I show you, it will be like this. This green ones will be the ones with the most buyers stepping in, and the red ones will be the sellers stepping in. Now, generally, people like the ones who just came to market and try to understand it by looking at it will just buy depending on color, but that is not a good way to trade, and is generally considered gambling. Now, this thing has a body and wick and some other parts. So, starting from what is a candle open? Candle open means from where a candle opened. For example, for this is a bullish candle, we will have the open at bottom of this area. That means this area. This will be open. And for close of this bullish candle, it will be above. Now, what are wick? Wick is this one. This is known as wick. Alright. Both of this are known as wick. And this will be the body. Okay. Now, this thing is pretty important to understand because through this we will in future learn about what is market structure. Alright, now that was the bullish candle example. Now let's imagine there is a bearish example as well. Bearish candle. That means this one. It will be in red color. Okay, I will just change the color to red. Okay. So for bearish candle, the open will be on top. Like it is just reverse of this buy candle, to be honest. Open, close, and these two will be wicks. And again, this thing remains the same like the body. Alright. Now this thing is the candle anatomy. So I'm removing this, and now let us understand what is a rejection candle. Now many people call the rejection candle as pin bar or something like that, sometimes hammer or many more. But for me, rejection candle is the most appropriate term, as like we get a rejected price action over here. Now what is the rejected price action? When a price comes to a level and just leaves a wick that is larger than its body, we call it a rejection. We can see whenever there is a rejection, the price tends to go to the opposite side. Now that doesn't mean that every time it will happen. For example, we have a rejection around this area. It goes up, but suddenly it falls down. Similarly, we again have a rejection over here, but it comes down and then goes up. So it is not obvious that every time you will see the same price action in like with rejections. Okay. All right. Now let us understand how market moves. Market moves in like two to three ways. First way is uptrend, or where the market is going to go up like this. Now this is known as an uptrend when the market is going up. There is another phase known as downtrend. When the market starts to go down, it's known as downtrend. But there comes a third price action where there is no move. That means market is not going up or down. It just does something like this. And then suddenly we get a move to opposite side, and then again a reversal, and then we move up or down depending upon whatever the trend was before. So this is what happens in the market. Generally this is known as uptrend, this is the downtrend, this is known as consolidation, this particular part, right? Okay, and rest of it is again uptrend. Alright, we can now start learning about market structure. But before that, I would like to give you guys a task. Simple task. You just have to mark these rejection candles. Send me picture. Okay. Or you can just email me at. Now this is your task for like this particular video. And in next part, I would most probably cover the market structure in detail. For now, I will just give a basic understanding of how it can look. Generally, market structure is something like this. When the market is going up, it makes higher highs and higher lows. Okay. Now you can see this example exactly around this area. You can see that markets is going up, then it moves down, then again goes up, down, again up, and then down from here once again, and then makes upward move. Generally, this move is more like textual. It will be only like valid on the paper, but the real market somewhat looks like this. And if I give a more detailed overview, it will be like this. This is how market looks in reality. Now coming up, what is higher low and higher high? Now you can see there are some consecutive candles making a high. Now why this is a high? Because it is a buying candle, and we can see this high was made of a wick towards the upside. And when we come down to low, it is generally a wick towards the downside. Now, when this happens, this one is known as higher high, higher high, and this one is known as higher low. Now this thing continues throughout this markets every time. Now for downtrend. In downtrends, generally this thing changes to higher high to higher low, higher high to lower high. This will be the lower high, okay? Because you can see this is the last low. So your new low will be after the break of this particular low with the body of a candle. Body means something like this. And you can see the next high that forms is over here, and it is generally lower than the previous high. and if it's not lower than the previous high, it will not be called a lower high but a higher high, and the trend would change. Now, what is the market structure shift? You can see there is a thing called MSS. So this thing keeps repeating in all markets, and this market structure shift is known as a point from where the market is now shifting from higher highs to higher lows to lower highs to lower lows. And this can also happen with the downtrend. That means when there is lower high and lower low being made, you may see a sudden high that is breaking the last lower high, and then with a body close, of course, then it will be called a market structure shift, as you can see here. Now that's all I would cover in this particular video on market structure, because that will be another topic to cover in the next part, and this series will continue till from basic to advanced. All right. Okay, thank you. That's all for today.
Stranded in the open.